I personally believe gold is going to go parabolic here in the next few months, latest early next year. Then it gets a big pullback, and then it marches higher again. I think we're going into a multi-decade period where commodities, led by gold and oil, are going to just keep going higher. I don't see any other way around that.
David Brady, the CEO and co-founder of Global Pro Traders, recently appeared on the Palisades Gold Radio, where he discussed the current financial picture. During the interview, David said, "The price of gold and silver is increasing, and it's no secret that central banks are actively purchasing them." According to David, this is the last pullback before a big takeoff in gold, silver, platinum, and miners. Hedge funds have massively shorted bonds, particularly the 10-year, while the banks have taken the opposite side of that trade. He has provided a few targets he anticipates in the next run. David believes that a mind shift is occurring in the public with regards to gold and confidence in currencies. Gold has a solid floor in place and will take off, but silver is expected to outperform. He believes that the dollar, in real terms, will decline in the coming years. He expects the silver-gold ratio to move closer to historical norms, and silver is projected to blow the roof off. According to him, the market is currently experiencing a slight pullback after reaching the 2089 level. He explains that this pullback is expected and firmly believes it to be the final one before the next upward move. David identifies the surpassing of levels like 2018 and 2089 in gold, specifically closing above 2055, as key indicators for a significant rally to ensue. He predicts that this momentum will extend to other related assets such as silver, miners, and platinum. We will now bring you clips from David Brady's interview with Palisades Gold Radio. But wait, there's more. To stay updated with all our future uploads, make sure to hit that subscribe button and turn on post notifications. Thank you, and enjoy the video.
History shows what? The banks are almost always the winners. And it makes sense because, the hedge funds, for some reason or another, they serially get it wrong at extremes. Now, what happens to gold and silver if bond yields start to go down? They go up. What happens to the dollar if US bond yields go down? There's two big factors in terms of intermarket analysis that affect gold. And when I talk about gold, I'm talking about the entire sector, because gold is the big brother and the rest follow. Now, when I say follow, I'll get picked on it. So let me make this clear. Gold determines direction. Silver will outperform gold. Miners will outperform silver. Junior miners will outperform senior miners. But I believe, based on the data and the positioning of the banks, that it's inevitable that we're going to new record highs. And I think the stage has been set. What the banks are doing right now is they're engaged in an organized retreat, is what I call it. They can slow the rise, they can push it down a little bit, but they can't fight the tide. And eventually the dam's going to break. And we've got a clear line of where that dam is. It's at 2089 in gold on an intraday basis. Right now it's 2055 on a closing basis. So once we take those out, gold could hit, ultimately 3,000. Some say 4,000. I'll be happy with 3,000. Maybe the minimum 2,600. Silver I see going to 50 or 60. Again, if you have some money, where do you put it in that situation? Mm-hmm. Assets are going down. You're going to buy real estate? Hell no. You're going to buy stocks? Hell no. If bonds run into trouble, and we can talk about debt ceiling if you want, but are you going to keep it in the mattress? Well, no, not if inflation's going up. Where's the obvious alternative? It's got to be like Bitcoin, gold, silver, platinum, maybe, palladium. There isn't much else. So even in that scenario, you could have a 2008 event, but there aren't. There are very few avenues to turn to this time around. And I think gold and silver would be the best safe harbor. And I think people are waking up to that. And they did wake up to that in 2008. They used that dip to buy. But I don't think any drawdown is going to be as big. And if it is, it'll be bought relatively quickly. So I'm not disputing that we will get a drawdown. We are going to go into recession/depression. You're going to see stocks have a very difficult time. It could be as early as Q4, it could be as late as Q2 of 2024, but it's coming. Real estate is going to face the same problem, maybe worse initially. And but how does that affect gold? It'll affect gold. Gold will have a pullback. It could be significant, but then it's just going to keep marching higher because the only response these authorities have is to print money. And let's say, people are starving, people are out of work, whatever it is. Let's say they roll out UBI. What do you think that does to the value of the currency relative to a hard asset like gold or silver? I mean, I get their point, but I don't think they're seeing the whole picture. There's too many. There's too many paper dollars going around. There's confidence is eroding clearly in the currencies. So yes, of course, gold and silver can have a pullback, a reversal, whatever you want to call it.
Moving forward, David holds the belief that we will encounter a deflationary event in the near future. Moreover, as the year progresses, he foresees a looming depressionary scenario characterized by a surge in unemployment, widespread bankruptcies, escalating credit card debt, and an alarming rise in auto repossessions. Simultaneously, the real estate market remains stagnant, exacerbating the ongoing banking crisis. Despite the Federal Reserve's anticipated measures of lowering interest rates and implementing quantitative easing, David doubts their efficacy in rescuing the markets this time. And consequently, we may be facing a meticulously orchestrated economic downturn, with numerous sectors succumbing to its impact. The cost of essential goods and services is expected to skyrocket, leaving few viable avenues for investment. During the interview, David also discussed the uncertain future of the US dollar and the potential need for a new global reserve currency, such as the digital SDR. He pointed out the unsustainability of continuous borrowing and devaluing the currency, highlighting the risks associated with excessive borrowing and currency devaluation. Let's get back to the interview.
And I want to bring up one other point that often comes up to me, and this is another seeing is believing moment. A lot of people say to me, well, can't the dollar and the gold go up together? Yes, they can. They did it from late 2021 into March 22, and then they parted ways again. But if you go back over, years and decades, you will see that, gold is the anti-dollar. But yeah, of course they can go up together. If the euro slides, the pound slides, the yen slides, dollar goes up. But the dollar can go down against, gold can go up against those currencies at the same time. And then, so the two of them just keep going up. But because people focus on gold and dollars, gold can go up in dollar terms while the dollar's going up against everything else.
Mm-hmm.
So basically what's happening is gold is truly appreciating in value or holding its value, but the dollar is depreciating against gold, but it's appreciating against even worse currencies. They're completely, you look at a correlation coefficient, it's like a minus 0.95%, 0.95. What more do you want? That's a near perfect inverse correlation. That's what I mean by seeing is believing. Can they go up together? Yes, of course they can. I'm not fighting that, but they're not doing it now.
Mhm.
But could they, like if the milkshake plays out, does that mean gold goes down the toilet? It could, but it could actually keep going up alongside the dollar
Mhm.
because everything else is falling first. But the dollar is, as I think you entitled one of our previous conversations, the dollar is scheduled for demolition. If given the plans that are being implemented right now, in order for those to be achieved, the dollar has to
Be
take
sacrificed.
Yes, that's the word I was looking for. Thank you. There has to be sacrifice because uh, if you want to introduce a new one world currency, say it's like the digital SDR,
Mhm.
the US has to step aside as the global reserve currency. It's tough times coming for us. It's going to be a hard slog. But in the short term, I will say that I'll go back to what I originally said at the outset here. A lot of people are losing faith, and every time it's human nature. When it goes down after being near a new record high, they start getting despondent that it's, oh, here we go again. It's going to drop like a lead balloon, and they see these big red candles on the chart. I think I've said at least 4 times now publicly. After this next low, see ya.
Mhm.
It's gone. It's uh, more often than not. If you take like buy low, sell high. More often than not, if you take the approach that when you see the market going down, don't try to buy the dip. But when you see it come down and you see that hockey stick up, then buy it. And then just place a stop where the bottom was. And yeah, you might be right or wrong 2 or 3 times. But when it turns out to be right and it starts going the opposite direction, it'll more than make up for the losses. And the same on the other side when you go to a peak.
Mhm.
It's just that human nature is the exact opposite. When they see it all going up, like in the dot-com bubble with tech stocks. Oh wow, that's up 80%. Oh, I think I'll buy that now. That's great. You just missed the 80%. There's only like 10% left, and then it's going to drop 50.
Mhm.
And the same in reverse. So, but that's the problem with human nature right now, and we're seeing a pullback in gold and silver. This is healthy. We were extreme bullish, we were extreme overbought. What does a pullback do? It resets that. What happens next? When we go up, we have the fuel to break out the previous high. And when we break out that previous high, it's just going to shoot higher. And then we'll hit a new peak. What is it? 2,300, 2,400. Then we'll come back down again. You'll get despondent again. And I'll be sitting there waiting to buy it again at like 2,000.
Mhm.
And then we go to 3,000.
The underperformance of gold stocks and silver in comparison to gold can be attributed to the prolonged secular bear market that gold has experienced since 2011. Over the past 12 years, the economics of the average gold mine have undergone significant changes, with production costs soaring while revenue remains the same. Similarly, silver has struggled to keep up with gold due to economic factors. However, gold is on the verge of embarking on a new journey, entering a promising phase called a secular bull market. This shift in market dynamics holds great potential for silver and gold stocks to shine brighter than ever before in the years to come. What are your thoughts on the interview? Do you agree with David's viewpoint that silver will outperform gold? Please kindly leave your comments and observations in the section below. Also, please remember to like this video, subscribe to the channel, and enable notifications to stay updated on future content covering topics like silver, gold, and copper. Thank you for watching.